Hi, everyone. I hope you're having a great start to your week, and I'm happy to be here with you. And today I wanted to talk about four reasons that your financial accuracy could be hurting your business, or lack thereof, financial accuracy could be hurting your business more than you realize. Oftentimes, we don't think about certain things hurting our business when it comes to our finances. But today I'm going to talk about four things you may not think about. And I want you to be aware of how the accuracy or lack of accuracy can hurt your business. So if you don't know me, my name is Audrey Faust, and I'm a financial advisor and not a business advisor and a fractional CFO, and I help businesses grow and prosper to the next level by giving them advice on finances, HR, um, team alignment, creating a vision, and stepping into that vision for your business. But today I wanted to talk about, as I said, four reasons that your financial accuracy could be affecting your business without you even realizing it. So, number one, and I talk about this all the time with my clients, you may not be making the best decisions in your business if you're getting crap in. I always say, this is the PG version. I always say crap in equals crap out. Because if you're looking at your financials every month, which I hope you are, I know you are. If you're not looking at accurate information, you're not going to be able to make the best decisions to grow your business. Because it's going to be wrong. So you're be making decisions on wrong information, and that's not good. If you want to grow your business, you got to be looking at accurate information so you can make the best decisions for your business. I'm talking about accurate information and income as well as expenses, because you need to know like where you're making your money, what's costing you the most money, is your payroll spot on with where it should be, and all the other expenses. If you're not getting good information, you're not going to be able to make those decisions. So that's reason number one, and that's kind of obvious, right? Reason number two is it could be costing you money in taxes. I've had several different situations where I've worked with clients, and their financial information was costing them money and their taxes. One person I just did a financial review with, it's just a simple financial review. She hired me to do that. And it was, we spent an hour going over her books. That was it. And I was able to save her a few $1,000s in taxes that year, the things that I was able to pick out and notice. So her bookkeeper, who I believe is part of her accountant's office, which is ironic, was doing the bookkeeping, which also meant her accountant wasn't even reviewing it, and was putting certain expenses into shareholder distributions that should have been written off. So that's one account I love to look at. I think I've talked about that before. But like, where else are they putting, where else could your bookkeeper be putting them? They don't know where transactions are going. They should be asking you. And if they're not asking you and they're just putting them wherever, it could be costing you money. So we saved her a couple $1,000s with a 1-hour call, a financial review, when we looked into her distributions and said, and pulled all these things out that her bookkeeper was putting in there that shouldn't have been. And distributions are not expenses, and they will not affect, bring your revenue down. So she was going to pay more tax than she would have by a couple $1,000s. So, and she was a fairly small business. Anyway, then I have the other extreme. So I have a very large client, $5 million client, who, when I first started with him, what I like to do when I first start with a client and I bring them on board to do their accounting is match up their tax return to the balance sheet. It should always match. If your CPA should always, your tax accountant, whoever's doing your taxes, so always make sure that your books match your taxes, the balance sheet. It's something this tax accountant, CPA, was not doing. And he had been in business for a few years. So I had to go all the way back to try to match it up from the beginning. And from the very beginning, he had been in business a couple of years, like 3-4 years at this point. There have been things that these tax accountant missed on the tax return the first year that cost my client probably, definitely over $100,000 in taxes. So between that and some other things we found, he actually saved a couple $100,000 in taxes that year, because his admin was doing his bookkeeping and his CPA didn't really know what he was doing. So between the two individuals that really shouldn't have been, doing what they were doing, cost him a couple $100,000 in taxes. So luckily, I got him with a new CPA, and we were able to figure out a way to recoup that. And I saved him a couple $100,000 the first year he started working with me. So that was amazing. That was probably my largest win. But still, from a couple thousand to a couple $100,000, that's a big window. And you don't want to be leaving any of that on the table. So number 2, if your books aren't accurate and you don't have the right people in place on your accounting, doing your accounting, it's going to cost you money. Number 3, vendor overpayment or underpayment. So I was working with an even larger business, a $40 million business, and they had an accounting team in place, and they had hired me to bring them from an industry-specific software into an account, QuickBooks. So through this, we were bringing in the past couple of years of transactions. Their software that they were in didn't really have great checks and balances for overpayments and things. So as we were bringing all this information into the new QuickBooks, the new accounting software, there was a theme appearing, and we quickly realized that tons of vendors, subcontractors over the last couple of years, and this was just the last 2 years we were bringing in, were overpaid. Invoices were paid twice, 3 times. Their other accounting software was industry specific, so it wasn't really set up to catch things like that. Plus, they had somebody in their accounts payable, although she had been with the company for like 10 years. So imagine how much money she cost them even before this, was overpaying people. And not only overpaying people, she was underpaying other people. So they were shutting them down. So you have one extreme and the other, right? Paying certain people too much and ignoring other invoices. So and one of the invoices she was like ignoring was FedEx, and they were billing out FedEx charges. So all these charges didn't get billed out. So that one particular individual, who's no longer with the company, obviously, it cost them thousands, hundreds of thousands of dollars, I'm sure, over the years that she was working there. And they weren't aware. They weren't aware. So that's the other thing. Make sure you have the right accounting team in place. And that's hard to know. If you're a CEO and you're not familiar with accounting and how the, ins and outs of, you weren't formally educated in accounting, you probably aren't going to be aware of a lot of this stuff. So having another set of eyes look at your books is great. And your CPAs, in most cases, this $40 million company had an auditing team who didn't even catch all these mistakes. They don't really go down to the nitty gritty to see what's in there. So it's really important, A, to have a great software, B, to have a great accounting team. But a lot of times you have no idea. You have no idea if your accounting team is good or not because you weren't trained. You're assuming they're doing their job. And if they're not, it's a lot of times it's hard for you to figure that out. So that's number 3, vendor overpayments and underpayments. Underpayments will cost you money in finance charges and being shut down, not being able to get what you need when you need it, which will cost you business, right? So all the things. So number 4, and the last one I wanted to talk to you about is customer relations. So financial accuracy could cost your customers. If you overbill a customer, they could get upset about that. Even if it's a legitimate mistake, they could think you're trying to pull one over on them. If you underbill customers and they don't bring it to your attention, you're leaving money on the table. So either way, you will affect your customers. Either they don't trust you, like everything is a reflection of your business. And how you're dealing with your customers, if you're overbilling them, underbilling them, mistakes are happening, you have to underbill them, you have to go back and change the invoice. All of those things are a reflection of your business. And if you want to create this image of your business that what you're doing as a service is accurate and dependable, all of your things in your business, your finances, as well as the product or service you provide, needs to reflect that because it's all part of your reputation. So that's the 4 things I wanted to talk to you about today. How accuracy can hurt your business. Financial accuracy can hurt your business more than you realize by preventing you from making the best decisions, costing you money and taxes, costing you money for overpayment of vendors or finance charges for underpayment of vendors or lack of being able to get what you need to run your business. And number 4 is customer retention with accuracy in your invoicing. So it's so important. And oftentimes businesses think of their financial accounting team as, oh, that's just something we have to do as part of a business. But really, if you're not using your financial accounting team to the best of your advantage, or you don't have the right people in place for your financial accounting team, it is going to hurt your business in more ways than you know. So if you want to reach out and have me review your books, do a financial review of your business, I would love to talk to you, even get on a conversation, get on a call and have a conversation and say, hey, Audrey, this is what's going on in my business right now. Is this something you can help with? I would love to talk to you. So reach out. You can message me on LinkedIn or, put a comment below and I'll get in contact with you. Have a wonderful rest of your week and I'll talk to you next week. Have a great day.